Alright, traders, a very good evening to you all. This is Avril from the Tradepsyche. It's Saturday, 5 pm, 21st of March, and I welcome you all to the post market analysis, outlook, and expectations from the market. In this video, we'll discuss about the markets for the next week, right? We'll analyze and see that what will be some of the crucial supports and resistances on the long time frame, right? And we'll also do the sectoral analysis in order to analyze that which sectors are relatively doing better, which sectors are relatively doing poorer, right? We'll also analyze at the end of this video, we'll also analyze the change in OI data, because today the data will be adjusted, right? So we'll analyze the OI data and we'll see that what is the kind of bias which has got formed relatively you know in the OI change and in the total open interest, right? And we'll also see that what trend can we see on Monday, Tuesday, and what trend we have seen in past 2 weeks, right? So firstly, as usual, in the weekly analysis video, we'll discuss that whether there are some positive or negative developments in the Gulf War. So there is one slight positive development, right? Just after yesterday's markets closed, right? Trump tweeted that we have almost won the war, and we are, almost we will be stopping the attacks from next week. Right, seeing that just after, when not the U.S. market but the U.S. futures at 3:30 a.m. according to Indian time, just when that happened, I think post that the U.S. futures rose above 1%, and still that is not factored by GIFT Nifty, right? Uh, that happened, that is one positive development, but still the weekend futures, Dow Jones and S&P, they are only half a percentage up, and weekend crude is, I think, 1% down. So there is a little sign of de-escalation from the Gulf War perspective, and which might cool off the crude prices in the next week. But let's see that how the developments go, what happens on Sunday, because every major event happens on Sunday, right? So I think, seeing this positive development, I think we should not be opening this much gap down which we are currently seeing on GIFT Nifty, right? So let's go straight to the charts and let's start analyzing, right? This was, I think, Friday's chart, and what we did is, and personally, frankly speaking, right, traders, I'm not sure why this happened on Friday. See, what happened on Friday is we were seeing 100 to 120 points gap up, and that too when on the prior day, when on Thursday session we broke 23,000 and we roughly sustained at 2302, but still we opened 100 points gap up and we straight shot above, I think, 23,200, went till 23,300 in the first 15 minutes of the market. The whole day we remained sideways, and at the end we saw the breakdown, and now we are 300 points down, right? So if the markets wanted to go down, why they were kept sideways? And even if you see Wednesday session, till Monday, Tuesday, Wednesday, we were fine. But on Thursday, we opened 800 points gap down. And after opening 800 points gap down, we are roughly in 200 points range. So we are not sure that in which direction markets want to go and what actually markets wanted to do. Although if you guys remember, we discussed that this pullback is not a real one, right? In the last analysis video, we mentioned that this downtrend will come, but we didn't imagine that it will come in a gap down. And okay, fine, one thing is that you're opening 800 points gap down, then at least give the continuation. On Thursday, the markets were totally 700 points down. From 700 points, 650 points were in gap down only. So post the gap down opening, the bulls who would have carried long, they got trapped, and they didn't even get the chance to short further. Yes, if someone would have shorted here and they would have carried short, they would have easily gotten trapped here, because yes, of course, we broke 23,250, and then we again the next morning we came at 23,250. What's the sense of shorting the markets, right? So yes, markets are slightly tricky, but that's what we can do, right? And this is Nifty 50's weekly time frame. One thing I'm very happy of is, I think 6 to 8 months back, we were essentially, if you are a regular viewer of these videos, we discussed when the markets were at this point, we discussed that yes, the markets will form a classic double top M pattern on the from the top, right? And it is actually doing that, and still the price action is not complete. But slight positive sign is we have not formed a, a very negative candlestick, weekly candlestick. It's a doji candlestick. So doji means confusion, which means that yes, both bulls and bears are not sure that where we want to take the markets. Because what happened is, the first 3 days of the last week we went till 23,800. This bounce we played, but this gap down, okay, we can manage a 150 200 point gap down, but 600 700 point gap down, that destroys the psychology of the traders. And not giving up continuation after that gap down, it's unfair to the players, right? And why most traders will feel trapped is because the whoever follows a moving average setup, for them, if the markets are closing above 5 EMA, 5 DMA, so technically they will exit their positional shorts. As we always discuss that as soon as we close below 5 DMA, we have to keep shorting the market unless we close back above this one. But still they miss this 800 points gap down. So if they wanted to make the markets fall 800 points, then why did they made the market rise 800 points? So all these are questions we need answers to, but answers in stock market generally is, in the stock market is that it was market, it had to do. And markets are supreme. Because we are not the ones who are controlling the market, we are the ones who are dancing to its tune. Right? So what do we look for next week now? From my perspective, still we have some downside left, but yes, the bears are getting exhausted. Because if what we expected last week, if you guys remember that, 1 2 3 big weeks happened. The fourth big week should be a panic fall, but it didn't come. We managed to save 23,000, right? So it's a freaking doji, right? Which actually tells you that it is a candlestick of confusion, right? Now if you see the price action, how we are following: sell, rise. Now this sell, particularly this one, is a event driven sell. So if the event vanishes away, it has a probability to go up back like this. Every event based rally, and I'm not saying that a sharp pullback can come, I am saying that yes, a kind of this pullback can come, right? But how will we play the upside? We will definitely get to see. But from weekly perspective, yes, still there is a slightly less sign of negativity, but there is no sign of positivity. I'll be still looking to play the sell on rise stance rather than buy on dips market, because we have failed to even close above 50% of the prior candlestick. We were doing very perfectly, but Thursday we made a big gap down. That is the problem, right, traders? Now for next week, if you see the price action, from my perspective, bulls for the bears for the short term, they are looking slightly exhausted, right? But Gifty is showing 300 points gap down, and Gift Nifty has not factored the Trump statement, which he mentioned, wherein he mentioned that he is going to stop attacks, that de-escalation part. So from my anticipation, we might be opening roughly around 100 150 point stops, and it also depends on tomorrow's events. What those events are gonna be. Right. So now for next week, what level you have to remember is 23,870. From my perspective, I am looking at a pullback till at least this level. We saw a pullback till 23,800, but if now this pullback comes, 23,800 will be breached and we will go to 24,200, 250. Why this level on the upside is because this was a 24,300, 350. This was a strong support which the markets broke. But we are not saying, see, bias we will form after looking at the multi-sector analysis, OI data analysis. But from the initial understanding of chart, if this is a doji, it means both bulls and bears gave a good fight this week. It was not only the bears who dominated, because from past 3 weeks, 1, 2, 3, only the bears were dominating. Right? So swing long next week. By swing long I mean is a long for 4 to 5 days will only come above 23,877 unless, see, one thing I'll make you clear is don't understand the price. Right? Don't just, if the markets are rising 100 points, we'll roll over. If the markets are falling by 100 points, we'll short the market. Don't do this, because VIX is at 22. It is very natural that within 5 minutes markets can rise 150 points, and within the next 15 minutes it can fall by 300 points. VIX at 22 means that the markets intraday can move up and down within 250 to 300 point range. Getting my point? So unless we cross 23,870 or 880 and sustain on daily closing basis, don't even think of going long. Strictly mind these words. And even if we go long, the maximum long which I think for the time being can come is still 24,300. I will be amazed to see that markets next week. Yes, of course, if the war gets resolved, it will be a sudden bullish shock to the market. Markets might rise, 1,000 points in 3 days, 4 days. But the condition is the war should resolve, and there are no signs as of now that the war is de-escalating. There are slightly signs, but in this war of words, I don't believe anyone's word. Whether it's Trump, whether it's Netanyahu, whether it's IRGC, whatever. Right? The real indicator will be the oil, because that is the only and only sole reason why we are falling. So this much clarity we have that. Sorry, my bad. I'm taking too much yawns, right? This much clarity we have that we have to go long above 23,870, 880. And this I'm talking about swing longs. I'm not talking about the positional longs. Positional longs will only and only come above 25,000. Right? On the daily time frame, on hourly time frame, we'll see that how to go long on intraday basis, but that's what for the swing is here. That's what, if you have to go long on the swing basis, you have to at least wait for daily closing about 23,880. If you go, see, now the markets have fallen so much, everybody is looking for a pullback. So at this point of time, when the markets have fallen so much, what happens is even a small fall is countered by a strong rise. Because yes, of course, the bears are weak, but still the sentiment has not done. This rise gets retraced slowly and slowly by bearish traders. Getting my point? So further bearishness will only and only come below 22,940. Getting my point? Because this was this candlestick high. Below 22,940, we will simply boil down to first 22,500. Below 22,500, 22,000 will be the ultimate support. 22,000. I think this is a very, very good support, and markets after breaking out this will be the second time the markets will hit 22,000. Right? If at all we do this in the next week only, like this, then I think next to next week we might see a pullback. And roughly at that point also, weekly 200 EMA also will come in place, which will act as a very good support. Last time we hit the weekly 200 EMA was around roughly 2020. So it is a story of 6 years back. So we are returning to the levels we are returning. This is a ultimate mean return to the average. And the price action moves in a way. See, when we are in a long bull run, understand this, right? First we hit weekly 50 EMA, we take a support. Then we, in the next bearish rally, we hit weekly 100 EMA. In the next bearish rally, we hit weekly 200 EMA, and generally weekly 200 EMA marks the bottom of a trend, the bearish trend. If the markets have to fall more, the weekly 200 EMA will get flattened out, and on weekly time frames, we will see an inverse moving average setup, like we see on daily, like we see on hourly, right? That's gonna happen. So I hope this price action is clear. You have to short. The shorting opportunity you will get only below 22,940 daily closing basis for swing short, right? SL and target you can keep up to as per your risk to reward ratio. But as of now, I am seeing no positive sign. And what my anticipation is, markets can stay in this channel for a longer period of time. So if at all we come till this channel, there is a high chance that we might bounce off from 22,000. At least 1500 to 2000 points within the next 3 to 4 weeks, we can bounce off. Getting my point? It's a very rare case scenario that I see 22,000 getting broken down and we are heading for 20,000. It's a very rare case scenario. But keep this thing in keep this one thing in your mind, that the more we fall here, more we will start to go, more we will prone for a stronger pullback. See, if you guys see, we fell for 6 continuous weeks here, but the 7th week we saw a very positive week. 8th week we saw a gap. 9th week we saw a W pattern, and then from the 10th, 11th, 12th week we bottomed out. Getting my point? What I'm trying to say, right? So further bearishness will only come up below 22,940 till 22,500. Below 22,500 you can essentially hit 22,000. Right? Let's go to daily time frame now. Daily time frame, we are looking more oversold market, and there is one price action which we even discussed, I think, in last week daily analysis video, is this one. We fell, we gave a rise, and as per our anticipation, the first rise should never be traded. The markets can do this. This will only happen if the Iran war resolves in the next 2 or 3 sessions. If at all we start breaking 22,940, which we might do in the gap down, then we are headed for 22,500 and 21,000. But there is a good possibility that we might bottom out from here, at least for 24,300 and 24,500. At least that will be a good path. And what we were anticipating, if you guys remember what we discussed, that we are moving in this broadening channel. Getting my point? So even if we go slightly down, this area will be very much prone for a rise like this. So still I am on this price action only, the broadening pattern. Like this. Still it is a valid price action because we have not broken the downward trend line. Getting? Let me also draw one more trend line wherein I want to show you one more thing. We are also moving in this parallel channel, which is not a winding one, but still this channel also supports a good bounce. Since we anticipated this bounce last week, this bounce came, but it was not able to sustain. But still there is nothing which is making the market stop from, which is stopping the market from doing this price action, except the war scenario, right? And believe me, why I'm saying ki the good swing long opportunity will only come above 23,800 700, because this is the neckline of this double bottom W pattern. If you see, this is the last swing high. So if at all the markets are crossing this swing high, so then next swing high becomes the target and next swing high becomes the target, right? And the first sign that the markets are going for this price action is an early or two early candlestick sustaining about 23, 370, 380. This will be the first sign. So now comes the discussion for intraday. If on Monday something positive happens on Sunday, and if on Monday we are able to cross 23, 380, 370, the first move which we will do is this gap covering. We have a huge gap on the upside, and if not on Monday, it will sometime be retraced. Don't worry. Every gap retraces. Getting my point? So above 2380, that's why I'm saying above 2380 we are very much prone for 23,880. But real bullishness will only and only come above 23,880. Why? Because we will enter into a double bottom W pattern like this. If at all we are breaking this neckline, we might first do this, take a pullback, then do this, then take a pullback, then final pullback, right? But if at all on Monday, if at all we are opening a gap down 22, roughly at this point of time, I think we might see a continuation market, or we might first half we'll see a sideways market, then we will fall, right? From daily time frame perspective, the markets luckily have not closed below prior daily low, so that is also a good sign from my perspective. But I'm not saying that the markets have gone bullish. The markets have started to go less bearish, right? The first bullish sign is any daily closing of prior daily high will be the first bullish sign, which will tell us that yes, the markets might be here for a pullback. Let's go on 15 minutes time frame and discuss on the basis of opening. If at all we are opening a gap up roughly 100 150 points here, wait for the crossing of 23,370, early close above it. Do not even touch the market if at all we are closing up, if we are not closing above 23,370 for bullish opportunity. I'm saying no trade range for swing players. In my perspective, I'm talking about swing players, is this big range 23,000 till 23,800, because if you skip this range, you will save a lot of money. Because what will happen is, if let's suppose the markets are going breakout from here, you buy it, right? If it's a fake breakout, generally, which is a very common story nowadays, you will be trapped like this. Markets will come down. At this point, you will feel that I should exit, I'm in a big loss. The moment you will exit, the markets will again rise. You think that, okay, let me take another opportunity on the bullish side, but the markets will again fall. So this range, whenever the markets are range bound, don't try to trade these markets. That's why I'm saying for swing bulls, only and only entries about 23,800. For intraday bulls, wait for early close about 23,350, 360, then target for 23,800. Getting? If at all we are opening a big gap down, roughly somewhere around here, so all these bulls will get trapped slightly. If they want to exit, they will exit, or they will literally they will exit like this. So it actually depends on Monday's opening, that how we are opening, and even after opening, what is the first early candlestick which we are forming. If it's a green one, then we might stay green for the next 4 to 5 hours, right? Getting my point, traders? So ultimately, I think markets are looking good for making a W pattern, but every Monday gap down happens. If you see 9th, gap down happened. If you see 12th, gap down happened. Right. Now we will see 23rd. Let's see gap down will happen or not. We'll go to Nifty Bank and discuss what Nifty Bank is doing. So for Nifty Bank, the story is much more negative, and we have officially closed below 54,000 and 53,500 too. Right. So the next legitimate target for Bank Nifty is 53,000. And now for Bank Nifty, I don't see any support till 52,000. So still Bank Nifty has the probability or has the capacity to go 1300 more point down. And I think this will be complete in the gap down itself. Why? Because if you see Bank Nifty's candlestick was a massive, massive reversal from the top. Right? So Bank Nifty is looking more negative than Nifty, if you see, right? So from weekly perspective, I think keep a stance purely sell on rise, unless on shorter time frames you will definitely see that above which level you can slightly go bullish. But 55,000 I think is a must for even a slight bullishness. Above 55,000 you can see 55 600 and 56,000. So don't even think to go bullish unless we cross 56,000, and Bank Nifty is looking actually more negative than Nifty. But the same scenario, the same theory here also applies, that it's slightly oversold, but markets can stay, highly irrelevant. Right? So market can stay irrational, irrelevant for more time, in which you can remain solvent. Right? So don't think that markets, Bank Nifty has fallen so much, how much more it will fall. It can fall. It can go to zero. This is stock market. Theoretically it cannot, but hypothetically for your sanity you can think, right? Because we have on Bank Nifty has broken a crucial support. So if this is a fake breakdown, Bank Nifty has to go back above 53 700 54,000 in the next two sessions only. If at all we sustain two daily sessions, then I think 52 500 and 51,000 is on the cards. And below 52,000 we have a gap till 51,000. It's a big gap. And even in Nifty, if you see, right, we have a gap below 20 to 800 till 20 to 600, or I think we are in the gap. 20 to 900 is a gap filling part, but I don't see any further gap. So this is a good gap and this got filled, right? Let's go to daily time frame. But one more positive thing here we have seen is, we have on Bank Nifty also, we have not closed below prior daily low. So crucial level becomes 53 to 70. Below 53 to 70 we can target 50 to 500. Below 50 to 500 we can target 52,000. But if it all we start to go below 52,000, we can very quickly reach 51,000. I just hope that it does not happen. We vouched for a price action last week. If you guys remember, we vouched for a price action like this. This price action will only and only be coming above, I think, 54,000. 55,000. Sorry, my bad. 55,000. Right? So mark for intraday traders, mark this level. 54,400. If at all we cross this 54,400, we will definitely go for gap covering till 55,000. So 600, 700 point movement, you can capture this. Let's go to hourly time frame. Same scenario here. 50. Don't even think of intraday positivity, bullishness, unless and until we cross back above 54,500. This is the level of 54,400. Any hourly closing above 54,500 can take us to essentially 55,300. So I'll remove this level. This will be the gap covering scenario. But since the lower level, 1 hit, 2 hit, 3 hit, we have given 3 hits, and if the gap down happens, I think we might touch 52,500 and 52,000. One interesting thing which can happen in the gap down is, if at all we open a gap down and we quickly retrace this, that will be a bullish sign for the market. Let me tell you. Because I think on Friday also we did the same. And this is a good demand zone as of now. A good candlestick came from this point of time. Getting my point? So be careful in Bank Nifty also. Bank Nifty looks slightly more bearish than Nifty. Let's do an multi-sector analysis. Okay. Uh, the good part in Nifty IT is we mentioned a pause, we mentioned a sell on rise stance, but again we have closed a green doji, and slowly but steadily, very slowly but steadily, Nifty IT is giving signs that it might bottom out. If you see, kind of a bottoming out pattern is getting formed here, and we can do this, right? So my stance will be take a pause and go bullish in Nifty 80 above 30,000. Nifty Auto, last week we discussed that this is a big bearish candlestick, but thankfully today, this week at least, we have closed a green candlestick, but still we have not closed our prior weekly high. So my stance in auto still will be pause unless we cross back about 26,400, 26,500. Nifty metal, what we were discussing Nifty metal, that Nifty metal has started to form a top. Why? Because the talks of rates being rising again are there in the market because of the rising inflation. So still Nifty metal has not closed above prior weekly high, so I'll still maintain a pause stance on Nifty metal. Why? Because since the simple reason, we have not closed below prior weekly low, right? Broader markets, if we talk about the broader markets, Nifty mid cap 150, a pause stance, because we formed a very big candlestick, and essentially if you guys see, right, the closing of the last weekly candlestick is same as the closing in this weekly candlestick. So it means that yes, buying has happened in broader markets. Is it the same story for Nifty small cap? No. For Nifty small cap it's a different story. So this is the first time I'm seeing small cap and mid cap also diverging. So maintain a clear cut sell on rise stance for Nifty small cap till the level, I think, of 7,500. I think 7,500 can be a good support for a bounce back for 3 to 4 weeks. And for mid cap, I think mid cap is already at a good level of 20,000. So that's why support came in for Nifty mid cap at 150. Right. Let's discuss something about India VIX. And I covered this in my reel also. I'll attach the link to my reel in the top right section of this video. The weekly close is thankfully we did not do or technically we have closed our prior weekly close of VIX, which was the level of 22.5, 22.6, but this weekly close is 22.8. But since the high of this weekly candlestick is lower than the high of previous weekly candlestick, so some complacency can come into the markets, but it totally depends on the war situation, because this is an event based situation and VIX has propped up just because of the event. Correct. Now let's discuss the OI data, the change in OI data basically. The change in OI data for Nifty is 1 CR addition of okay, interesting. So the data which I am seeing here is from 24 March of expiry, is 1 CR addition of longs and 87 lakh addition of shorts. So more number of longs have been added, and that is what, if you guys see, being reflected on the chart, that each and every sector, Bank Nifty, IT, auto, metal, every sector has formed a pause in the market except small cap. And that is what exactly the OI data is also reflecting. For the Friday session, we have not created more number of shorts in the market, and that is a slightly healthy sign. I'm not saying we can go bullish, buy a call on Monday morning. No, I have already mentioned that above which level on Nifty you can go bullish on intraday basis and on swing basis. But yes, this is a slight relief for me. Let's go to Bank Nifty. Okay, first we'll discuss the total open interest. 23,000. Almost we is this data glitched? How can the PCR be so perfectly won? 23,000 has a very good support, so I don't see it breaking anytime soon. And even 23,100, because of course we are at 23,100, has a good support. So markets can revolve till 24. Markets can revolve in the range of 23,000 to 23,300. any good short covering, because highest number of call selling is at 2300 and 23,500. So that's why I'm saying any good short covering, if at all it has to happen, it will happen above 2380 and 23,780. Above 780 you can go swing long, but above 380 a good short covering can come till 500, 650. Let's go to Bank Nifty. So data is, I think, decent. Data is not bearish. Bank Nifty, that's what we were talking about. Bank Nifty was looking more weak. So we have seen addition of almost 2 lakh of shorts, but unwinding of longs also have happened. So Bank Nifty is definitely bearish. Total open interest, double the number of longs. So still Bank Nifty has good. We are at 53,400, but there is a good support at 54,000. So these players are trapped. So if a gap down happens, then I think market should protect 54,000 on Bank Nifty. But if it's a very big gap down, then I think they will panic and we can hit 53,000, 52,000. So that is the complexity of the data, right? So from overall perspective, now we have analyzed the change in Y data, the total open interest. Markets are looking for a pause for the next 1 to 2 week. If at all the situation remains calm, if at all each and everything remains uh, as per the scenario that some de-escalation happens in the Middle East, something happens in the Middle East which can, reduce the oil prices. If that happens, then I think we are set for a pause or maybe a bullish week ahead. From the data and from the technical analysis on the charts and sectoral analysis, basically, not the technical analysis, sectoral analysis, we are looking at a pause for the next 2 to 3 weeks. All right, traders, I hope you have liked the analysis, and if you have been watching this video till this time, leave a like, leave a comment, and if you have not subscribed to the channel, subscribe to the channel. Share it with your trader friends. Stay safe in the market. Good evening.